All right, welcome everyone to Office Hour 2, Financial Modeling and Valuation. So today's call is a very useful session for you guys. It is an opportunity for you guys to put forward your own specific challenges, your own specific queries, your points of view, and have an open discussion with your batchmates as well as our mentor, Ivan. So please do use this opportunity to get all the key things that you want to know, you want to get clarified, sorted. Additional to that, if any of you want to share something, if it's your particular numbers and you want to share screen or anything along those lines, just do let me know. I can be very helpful in putting that together and putting that across. Yeah. So without further ado, I open the floor to all of you guys. And we can start with whoever would like to go first. Yeah. Maybe to kick things off, Ivan, one of the key questions I wanted to ask you, yeah? So you and I have been working together for 3 years, Ivan, and we've seen quite a few different startups, especially when it comes to preparing valuations for raising funds, yeah?
Yep.
So based on that experience in terms of us working with startups looking to raise funds and how they look at valuation, from the mindset perspective, yeah, how should founders go into when they're developing their valuation, right? So, it's most of the time when we're working with these founders, it's the first time they're raising funds, first time they're talking to investors. As you know, investors, you talk to five investors will say five different things about how to do things, right?
Yeah.
How do they start that process and determine the right direction for themselves?
Okay, I think first of all, basically, all the entrepreneur must be really familiar in terms of their own products. All right, that is very important. In terms of the second, I think it's more towards in terms of your ideal, your visions, and how you actually can drive your business, to the I can say it's a even more bigger business, or maybe it's a profitable business. So I think this is a very essential that need to present to the investor. Yeah.
Got it. And from our experience, right, we've seen some founders with weird term sheets that they've signed before or have agreed to pretty ridiculous investment terms, right? I think one that I recall you and I looked at was a startup where they sold, I think, 40% of their startup for 100,000 ringgit investment at a very initial stage, right? So
yeah.
I think we touched upon this a bit yesterday, right? In terms of when founders are thinking of that long-term plan, right? For example, you mentioned think about listing and all these things.
Yeah.
But how do they actually execute that, especially when they're so many years apart? What are the mechanisms that you see some founders use to basically start planning how they can still maintain control and still raise funds along with time to scale their startup?
You mean in terms of more towards long term?
Yes. How do they plan for the long term, right?
Yeah. Okay, if you're asking me, right, first of all, if you really want to go for to that kind of a long term like the IPO plan, so I think the most important thing is even though you are just a startup right now, all right, but somehow you must also try to understand if you really want to go for IPO, what are actually the general requirements for you to do that. Okay, for example, IPO, if you want to go for the main market, all right, so the requirement is actually 3 years continuously profit, which you need at least a minimum of 20 million. All right, so from there, you at least have some criteria, conditions that how you actually now you are only from the startup and how eventually you can drive to that kind of figures, and then you actually can eventually go for the IPO. So this is my sharing. Yeah, even though you are just from startup, but you should have a bigger plan in your head and also try to understand, once each stage, right, what are actually the requirements for that.
Got it. All right. Would like to open the floor to questions from the startups. Oh, okay. So we have a question from Catherine. Yeah. Sorry, my mic's not working at the moment. No worries, Catherine. May I ask, in terms of financial modeling, what does it mean by top level, right? Or what should we actually show on our deck that an investor would want to see?
All right. So the top levels, I mean, is more towards like top down that I'm referring to. So top down is actually, I can say, for example, like sales. Okay. Okay. For example, just now I think yesterday we have one business model, which is some IT devices that can measure in terms of your health. All right. So in terms of this one, right? If I want to show a more towards in terms of the top down, right? So which is actually my target segment. For example, it should be target somehow around the age 40, age 30, to age 60. So then after that, how much of the population, for example, I want to target for the Malaysia. Okay, this is actually the market size. Or maybe you yourself still want to expand to Singapore, or actually you want to target go for like Indonesia. So all this is we call it like the population is your market size and how much actually the market share that you can going to aim for it. I mean, of course, 100% of the market share, you definitely cannot just grab 100%, right? So perhaps if let's say this is a new product, maybe it's also a relatively good price as well. So then you can compete in your market. Then you can say, I actually can grab, 5% of this size of market, within a 2 years time. So this is what we're referring to that whether the demands of your product is there or not. So we call it like the top level.
Mm-hmm.
Yeah.
Makes sense.
Yeah.
All right. While waiting, just in case Catherine has a follow-up, yeah. So Stanley has asked another question in relation to net profit, yeah. So if Stanley is aiming for 20 million net profit, yeah, and if that by that token, right, the 20 million profit is 10%. Wait, the 20 million profit. So if the profit net is 10%, that means sales must be 200 million a year, correct?
Okay, so I think I'm referring your net profit margin is like 10%. I mean, if you based on calculate at that way, right? I think the sales is 200 million. If, for example, your industry, your business, the net profit margin generally is 10%. I think that will be correct. Yeah.
So I think maybe based on Stanley's question, right?
But again, the 20 million, I'm not sure whether is it you're referring to my IPO I mentioned earlier. So the 20 million that I mentioned in IPO, right, is a 3-year continuously total up cumulative is 20 million. For example, if your year one is 10 million, your year two is 5 million, your year three is 5 million, so it's still equivalent to the 20 million. It's just that you cannot be the year one 10 million, year two loss, and then year three you actually have a more than 10 million, then cumulative with the 20 million. That is that is not okay for that. Yeah.
Each year you need to make profit, yeah?
Yeah.
For those 3 years. Got it.
Yeah.
Okay. Following up on that, yeah. So just in terms of IPO, so especially if a startup, the reasoning that we've had discussions on this before is that even if startups have the angle of, hey, you're working towards an acquisition or working towards a different kind of exit, it's always better to work towards an IPO. So then at least you have all the key due diligence in place, right? So just wanted to understand when startups are working towards maintaining that 3-year profitability, right? What is the mindset they need to approach when they do that?
Sorry again, Nash, your last questions.
Can do.
Yeah.
So in order to go for listing, especially let's say in Malaysia, right? At least Malaysia as a basis, yeah. You need to be profitable for 3 years and you need to make 20 million in profit, right?
Yeah.
So
correct.
how do in your experience startup founders balance that along with the what's it called, the scaling process of trying to get more users, trying to increase their other different what is the word for it? There are different metrics as well. So what other approaches do they take to kind of balance both sides of things?
You mean balance in terms of startup and also the IPO exercise angle?
Yes.
Wow. I think this questions is I can say it's quite broad. Okay.
Mhm.
Okay, maybe I just give example. I'm not sure everyone is aware about Oriental Copy. So basically, if you look at the Oriental Copy IPO, right? Basically, I think they only operate about 4 to 5 years. Actually they can get the listed. So the I mean, of course, the main reason is because they also take it out from their others family business, and then a startup, then after that they build in terms of the concept, the chain of the Nanyang Kopitiam's concept, right? So it really depends that how you balance it. But as long as you find a way, and that way is actually work, which you can generate the 20 million within 3 years. So I think you can just go ahead. Okay, right now, I think even I myself also are doing a one IPO case, right? So basically, this company is already established about 39 years, all right, 38, 39 years, right? So again, they're always profitable, all the way, but somehow they only will start to do the listing, by now. So I mean, of course, the reason is because the founders is already 60 over years old. They want to build another milestone, pass to the second generation. So as I say, in terms of how to balance, this is a very broad topic. I cannot limit it. You must do it within 5 years, or even like 30 years is considered is already late, to do the IPO. So again, you have to go back to the entrepreneur. What is actually the ultimate end? Some people they intend to take shorter time, but some people they intend to take longer period. Yeah.
Got it. Got
Okay.
it. I think we have another follow-up question from
Yeah.
Catherine. If you could open up chat, Ivan, I think she
Yeah, I
has
saw it.
uploaded a table. Yeah.
Yeah, so sorry. Yeah, okay. I think Hafiz correct. Okay. The next one, sorry, can we have a copy of? Is it yesterday's slide?
Yes.
Yeah, I think next we can share, right? I mean, up to you. Yeah.
You can just can send it back to me, Ivan, and then I'll upload it onto our Academy portal.
Sure, no problem. Okay, so yes, thank you. I got it on top down. So meaning, do we input the key assumption of our project on that? Yes, definitely. Just now as I mentioned, let's say for example, you target like Malaysia, Singapore, Indonesia. You still have to make some assumption that how much that you're going to capture. For example, maybe 1% in the first 6 months, and then maybe another 2% you're going for, another 6 months. So you definitely have to put some key assumption in your projections, because otherwise you cannot tell people, I have a 33 million in Malaysia, I capture all the 33 million populations, to prospect to your revenue. Yeah. Okay,
Just to
then.
kind of add up on that as well. Yeah. So in relation to specific assumptions, right? Like you said, Ivan, it's you have to assume, right? Sometimes, like especially for early stage startups, you don't
Yeah.
have the details to cover that. But you need to think of ways that you then justify your assumptions, right?
Yeah, of course. Yeah.
So for example, with Remo, right? From your TAM of 7.2 bill down to 216, down to the 10.8 mil, right? Right? It does look like, oh, it's more attainable. 10.8 million looks more attainable than 7.2 billion for sure, right? But what are the processes that you're going for that 10.8 mil? What partnerships are you going with? What accessibility does that provide you? And how you are able to then service that 10.8 million, right? So having that very key storytelling that connects to your numbers across your deck is very important. So the storytelling side and the finance side need to connect with each other. If not, both sides don't work.
Yeah, correct. Yes. Okay, I continue read the questions. Is the discount rate the same as a cost of capital? Cost of capital, I think is quite difficult apply to startup. Okay, first of all, I mean, in terms of equity, you do not have much. I believe right now it's 100% equity. So if you mention about the cost of debt, right, I mean, definitely you do not have any borrowing as well, because it's a startup business. So I think the discount rate is normally we are referring to like based on the current economic situations, right? What is actually the best discount rate that you can use it, for the next few years? So basically, we have some so-called general discount rate, for that. So normally generally you can use about 18%. So if you get a better, I mean, investor is okay for that. I mean, they sometimes they can use 15% as well. All right. So it really depends on where is the investor look at in terms of your discounted rate on your forecasted cash flow. All right. Yeah.
Got it. I think we have a follow-up question from Hafiz.
As
As
for
for us, yeah, let me just read it, yeah, Ivan, so then at least it'll be on the recording, yeah. As for
okay.
us, IPO is too far-fetched as we're at an early stage. I'm interested to know how to evaluate us based on a pre-revenue MVP and how much is actually ideal to raise based on that.
Yeah. So, okay, I think yesterday we did mention, I mean, most of you may not have a revenue yet, or even you have is a very limited, but somehow if you want to go for further, you cannot base on the current revenue to do the fundraising. All right. So what you need to do is you have to prepare the financial modeling. As I say, different business model, different kind of assumption, different kind of timing deliverables. It can make your financial modeling with the different figures. All right. So the financial modeling is actually that part will help you to generate in terms of your company valuation. All right. For example, the year one, I can generate the 500,000 profit. Okay. Year two, I can shoot up, to 3 million profit. Let's say 3 million. Okay. Because why I can do 3 million? Because I have my business model, maybe I recruit enough salespeople, or maybe I do some marketing coverage, which I capture, some. So it's more towards how do I do it? What is my strategies? What is my business model? And whether the things that I put it into the period, right, whether I can deliver and execute or not. So let's say all these things you put, year one, year two, year three, year four, year five, right? Everything you input into the financial modeling. Then of course we have to put all the discount rate, for the year two, year three, year four, year five. Then that will be your valuations of your company, of your startup company. So let's say, for example, you put it like 10 million, all right, based on the formula, you have a 10 million valuation. So if you want to raise 2 million, right? So basically you can just give about 20% of your equity. So you yourself will dilute it to 80%. So while you actually raise 2 million to pump into your business, and you have to give up, I mean, not give up, I mean, you have to give a 20% of the equity interest to your new investor. So that is the figures. It depends on you how you build the financial modeling and also create the valuations. All right. Did I answer you, Hafiz? Yeah.
All good, Hafiz? All right, all good.
Okay.
So,
yeah.
Opening up the floor to other questions.
Yeah. Okay. Yeah. Thanks. Okay.
Any other startups want to clarify and get any queries out there? Go ahead, Hujat.
Yeah.
Yeah. Hi there. I just wanted to know, the last time I checked the trend, right? Like in Silicon Valley, there's a benchmark for a pre-revenue startup, right, for valuation. And then Singapore also has another benchmark. What are you seeing for the benchmark in Malaysia for pre-revenue startup? But usually, what's an average like pre-money valuation that you are seeing in Malaysia?
You mean in terms of Singapore and also in Malaysia?
Yeah, I mean, Silicon Valley obviously has the highest pre-money valuation, right?
Yeah, true.
And then Asia is Singapore, so after that Malaysia. So what kind of is the average pre-money valuation that you're seeing in Malaysia right now? Or what's the trend?
Okay. So if you're asking me, right, I'm not so how to say in terms of the comparison with all the country. But if you're asking me, right, because I'm also doing quite some of the pre-money valuation, for those startup company. So I think in Malaysia generally is still considered quite low as compared to others country. That is what I'm aware of. Yeah. So maybe in another word, was if we want to raise money in Malaysia, right? I believe is consider were a bit more challenging as compared to other countries. Yeah, I worked out a few pre-money valuation in Malaysia. Basically, it's like the size of the company is more towards like 10 million to 50 million. That is this all this field exercise is actually done by myself as well. Yeah. Okay.
All right.
Okay.
Does that answer your question, John?
Yeah, I mean, maybe you can be a bit more specific. So, like, maybe for tech companies in Malaysia, are we talking like a pre-money of 500,000 ringgit, or is like 1 million for your average tech company in Malaysia, like pre-revenue or pre-money? Like, what's the sort of benchmark, like in terms of number? Thank you.
I can't give you the benchmarking because in Malaysia, right, it can go down like maybe like 100,000, you know, to the 6-7 million. Because I also did one for the travel tourism, which they also involve their business, you know, in other countries. I think that round that basically raised about 7 million. Yeah, 7 million kind of I mean as a whole, maybe the whole valuation is about 40-50 million ringgit Malaysia, and then managed to raise about 7 million of the funds for that kind of pre-startup company with the concept. Yeah.
Just to kind of add on what Ivan is saying, generally speaking, in the Malaysian ecosystem, for early stage startups, so startups pre-MVP, pre-seed. One thing I would say is that Malaysia just doesn't necessarily have the saturation of venture capital players, angels, and investors to kind of create kind of a benchmark for the size of checks that we see or the kind of deals that are being reached. The challenge is that it is very much a buyer's market here, where basically so many startups are competing for a very limited amount of capital at that initial stage. So on the pre-seed level, it's very hard to say. What I do see the trend is in terms of early stage startups is that most initial rounds are FFF rounds, friends, family, and fools, right? Like basically getting your own internal network to help cover your first initial round. However, the new startups that I do see raise funds usually raise funds with more towards strategic investors for their specific solution and use case. The other early stage startups that tend to be more successful or find more opportunities in getting traditional related funding tend to look at raising funds from Singapore and either channeling it through here or working on a multimodal model where they raise funds in Singapore but operate in Malaysia, right? So it kind of depends on which angle that you're looking at. If you have very specific strategic investors coming on board, there are a few angles, but if you're looking for investors in the more conventional sense, the easier pathway tends to be Singapore. Is that right, Ivan?
Yep, correct. Yes. Okay.
Yep. So I hope we answered your question there, Hujan.
Yeah, thank you. Yeah, good feedback.
Yeah.
Thank you.
No worries.
Okay. Another question is, can we have a simple formula or Excel to calculate the valuations of our company? That I believe you all have a one class is doing the calculations, right? Is that true?
Previously we did do case studies, remember, Ivan, where we can practice the valuation, but in this particular cohort, we don't have that particular session to run valuations.
I see. So do you have that formula? Maybe can provide to them to just put the P&L balance sheet. Yeah.
Ivan, you're referring to the previous case study that that we used to conduct, yeah, UI and the team during your case study sessions, yeah.
No, my case studies are more towards cap tables, but I remember last time another modules is covering about share to them how to calculate. Yeah. I
Yes,
remember that.
yes.
Yes.
Preparation for fundraising, yeah. So
Yeah.
preparation for fundraising, we might cover in terms of how we approach the valuation, but it would depend on our current speakers this cohort. So on that question, Stanley, in terms of calculating valuation, I'll put it forward for our speakers for Masterclass 6 and 7, and it should be covered there.
Yep.
Yeah. Right. Any other founders with any questions or any other things they would like to post? The floor is open to all. I think in addition to that, Ivan, especially for founders with a non-financial background, right? In terms of how can they get started in terms of upskilling themselves to handle the financial books. In your experience, as a founder, what are the few key things they need to cover and be able to master, and how would you suggest they go about doing that?
I think first thing definitely is your top line. So no matter what, the top line is your main concern, because as I mentioned, for the first startup companies, right, you need to do the sales, you need the collection in order to get the cash inflow and then survive and sustain your business. And then the next thing that I need to highlight is more towards in terms of your GP margin. So sometimes you have to make sure that your GP margin is really sufficient to cover in terms of your indirect expenses. I think these two are the key things. And of course, the third thing, as I mentioned, cash flow. You have to manage the cash flow very carefully. Yeah. For the startup business. Yeah.
Got it. Got it. So covering these three key things are the key steps to making sure you still stay in business.
Yeah.
Got it. All right. In terms of any other questions from the founders, do we have anybody else that'd like to clarify any thoughts, any perspectives in relation to financial modeling and valuation?
Yeah, just one other question
Go ahead.
regarding financial modeling. Do you guys provide any financial analysts to help the company prepare the financial model? Or, for example, do you work with or MIT, Imperial, or any of these colleges to provide like a senior or finance graduate to assist the company to do this kind of modeling work? I say that because in the past, like, we worked with London Business School, and then they researched their MBA students to help us prepare the financial modeling, like for our early stage, because these guys are already doing economics and finance like day in, day out, so they have a stronger, technical ability. Like, is that something that you guys can arrange or provide to assist? Thank you.
So in terms of Beyond4, how we do actually have a support poster program to cover specific startups as part of this. So as part of what we do at Beyond4, we support the startup ecosystem as well as the larger business ecosystem with a suite of shared services, right? Covering finance, human resource development, business development, cross-market expansion to different markets around Southeast Asia, as well as Asia Pacific. So as part of that, we do have the internal team on board that has helped startups with specifically building up their financial modeling, as well as securing a valuation. But that would be on the next step of the program after the accelerator, yeah? So usually this is a paid service, but for specific startups, these particular services are covered by the sponsorship body, which is Yayasan Paham in this particular case for you guys. So that might be something we can discuss and potentially put forward to you guys if that's something that you would like to get additional support on. But in terms of the scope of the program as a whole, that is not necessarily part of the scope. But
Okay.
that's a good perspective as well to potentially reach out to a couple of universities to see whether or not we could potentially collaborate on a pathway like that. That's pretty interesting. Thanks for that, Ujat. Good idea.
Thank you.
Right. With that, is there any other founders who have any questions or queries? All right, one more perspective from me, Ivan.
Okay, yeah.
So covering the fact that most startup founders, right, do not have the financial muscle or the financial ability to run their own valuations when they are going towards fundraising. Yeah. I think that's a pretty well-known story, right? Startups, what they call, want to raise funds from a specific investor, and the investor asks for valuation, and they don't know how to do it themselves, right? What's a DIY structure or process that they can kind of approach in order to run a valuation or prepare things in a way that allows them to kind of be self-sufficient?
You mean for startup entrepreneurs?
Yes.
If you're asking me, I mean, perhaps I'm still a professional, so I think you still have to go to the financial modelings and all this kind of thing, to justify. And maybe perhaps second thing is then it also depends on who are your investor. Okay, for example, if your investor that do have a similar experience, that they understand what are you brief in terms of your new products or your business. All right. So perhaps when you mention some of the valuation, which is also in line with the investor, right? So I think that is also another ways that can convey the message, the proper message, valuation message to the investor. Yeah.
Mm-hmm.
So that's about it. Yes. Yeah.
Got it.
Because I do have some because I'm also personally involved some M&A as well. So people always say, okay, do you want to buy my business? Okay, it's actually worth about 20 million. Do you want to grab about 30%? So sometimes you see the business may be at loss, all right, because they need to restructures and all these things. But somehow from the professional perspective, we cannot just depends on what you all say. For example, I want to open another branch. I want to create this new product, that product. I mean, somehow we need to see that whether how you plan it, and put it into the financial modeling, and in terms of the figures to justify your valuations. Yeah. But again, as I say, if willing buyer, willing seller, you open this valuation, the investor is willing to grab it, then that will be not a problem. So yeah.
Got it.
Mm.
Okay, Ivan, we have a question from Wyckoff, right? Should startups consider P2P financing or crowdfunding? So maybe on this, Ivan, you could share some of your experience helping startups with crowdfunding or ECF, and what that experience was like as well.
All right. So if you're asking me, definitely, personally, I'm not so recommended in terms of the P2P financing. P2P is more towards like the platform, right? So in terms of that, right, the interest rate is actually more than 10%. All right, more than 10% is a very high interest rate. Okay, so you really need to consider for it, because even though like credit card, the interest rate is about 18%, it's a super high. So you imagine P2P is like 10 to 12% or even like 13%. You sure, unless you tell me for the startup, you really can make sure that you can, you have a high profit margin business, you can sell everything, you get the money, then you roll over, then the answer is yes. Otherwise, I'm not recommend for that. All right. For the crowdfunding is more towards, you exchange with the equity, right? Is that the crowdfunding you mentioned? So if yes, then I believe this will be a good idea when you're doing the startup. But it's just that you have to bear in mind because I also did mention about the pro and cons about the crowdfunding. So if you exchange with your equity interest, that means you yourself as founder, you cannot enjoy 100% lah. So let's say if your company making a profit in the future, so you have to share back the dividends, to the minority shareholders. So that's the pro and cons.
Got it. Wyckoff, just to clarify, you're referring to crowdfunding as in Kickstarter and platforms similar to that, or equity crowdfunding similar to platforms like Pitch In and MyStarter in Malaysia? Both. Maybe I'll also share a little bit of my experience with equity crowdfunding. Yeah. So over the last 3 years, I've helped 3 startups with equity crowdfunding campaigns of different levels of success, I would say. Right. My experience with equity crowdfunding is that a lot of founders go into the process thinking that, hey, once you put the equity crowdfunding offer out there, right, people will come flocking, right? Let's say in your mindset might be like you're trying to raise 1 million ringgit, let's say lah, easy number to remember, and you might think, oh, I might be able to bring from my personal network 100K, 200K, and then the rest I can maybe get from people who see my listing on this platform and think it's interesting, reach out to me and want to invest. From my personal experience, especially if your solution is not an extremely customer-facing solution, it doesn't work very well, right? My experience with the startups that we've helped fundraise is that they've had to bring in basically 80 to 90% of the investors from their own network still, right? And maybe at the very end of your campaign, you might get 10, 15%, if you're lucky, about 20% coming in very organically, right? So then the question then becomes like, why would you do equity crowdfunding, yeah? If you still have to bring in all the investors yourself and still go through this entire process of getting sorted, right? So I think if that's the case, you can just go to Ivan to get him to formalize all your investors under one company and have them be an investor, correct? But the key angle why a lot of people do equity crowdfunding is that there's government incentives, right? So depending on your specific structure of company, the government can do a matching investment that you can then buy back at a later point. So in one particular startup that we raised funds for, they were aiming to raise 2 million. After they raised 1.6 million, the government topped up an additional 400,000, right? So that's the advantage that it gives you, right? You can get an investment that at a later point, you can buy back from that specific government agency at a rate that you will basically not be able to get anywhere else, right? However, it's still difficult. The startups I've seen that have been more successful with it are startups that have a very big network, right? So very consumer-facing brands, and they're able to then scale that impact very quickly to their equity crowdfunding. In terms of regular crowdfunding as well, so long as you can deliver on whatever your Kickstarter goals are and you can actually convert people, it should be fine, right? Because there's not really what's it called, an equity-related impact, right, Ivan?
Yep, correct. Yep.
Yeah. All right, cool. I hope that answers your question, Wyckoff. The next person that we would like to have ask their question is Ayim from Bossrack. Ayim, you can unmute and go ahead.
All right. Hi, Ivan. I have 2 questions. Number one is regarding financial forecast or financial projection. Because we, as a founder, when we pitch to investor, for sure that investor want to see a good confident number. So as a founder itself, should we put the number based on the how confident that we should put the number based on what the investor see or based on what we capability? Because we still on the pre-basic level of pre-revenue, we still maybe on the demo or maybe beta test our system, we don't even enter the market yet. So that's my number one. Number 2 question is for the some the market size, or should we, is it a must that we put the number based on the value of money, or we can also put in our pitch deck the number of customer or maybe the number of operator. So that is my.
Okay, can you again your second question again in terms of the what number customer? I mean,
For the market size. For the market size.
For the market size, how you determine the market size? Is it?
For example, if I do a marketplace,
Okay.
I put based on the operator, how many numbers of operator that the total addressable market, or maybe I can, or should I put how much the money will come from the each operator? So which so that's my second question. And because me myself, I have a challenge because in Malaysia we don't have enough data for the adventure tourism market. We are only have a general tourism market. So how from that data, how can we do for the terms of, because the general tourism is the number is really huge, but for adventure tourism, even we ask Motec, we ask Tourism Malaysia, they also don't have the data yet. So what should I do for that?
Okay, understand. So I will answer your question number one first. All right. So whether it depends on what investor looking at and also what is your capabilities. All right. So again, if you look at why we actually go for the fundraising. Okay. We fundraising because we need to raise some funds, and where is actually the fund from? It's actually from the investor, and what is actually the investor looking at? I mean, of course, most of the investor, is actually looking at the return. I mean, generally, I mean, of course, some investor they may looking at whether your new product is actually good for the whole benefit to the humankind. So there's a lot of the investor appetite for it. Okay, so again, if you look at this investor general philosophy, I mean that most probably they're looking in terms of the return as well. So somehow, if you tell me, if let's say based on your capabilities, all right, that you only can generate not much of the profit, right? So if that is the case, right, how can I convince the investor to invest into my business? All right. So the first thing that when I say I want to go and raise a fund, from an investor, is because I actually carry a big dream enough, okay, because I know that I have a capability to deliver that kind of a sales, to deliver that kind of a margin, to deliver that kind of a net profit, because I have a lot of good business model strategies, So that is actually how come from. So again, as I say, go back to your questions one. So it's not necessary to say you must just meet the investor the comfort level, okay, or maybe you have to depend on capability, but these two items should be in line. So that means whatever you do is also meet the investor requirement as well. Because otherwise, as I say, if I'm not capable enough, or maybe my capability is only, a very small profit, then perhaps I think maybe the raising fund is not the right platform, for you to step in. I hope I answer your questions one. Yeah. Okay. So go to your question two. Okay. So yes, of course, in this world, you definitely cannot have all the data. But again, bear in mind, if let's say you really want to compete, with your business, in this economic world, all right. So no matter what, somehow you still have to go and identify who is actually your competitor. Okay, for example, yes, generate data, you may not able to search from the website and all this kind of thing. But again, that is only one of the methodology. All right. For example, second, let's say you say you want to go for the marketplace. For example, maybe you sell health product. Okay. So then from a health product, maybe you can go to your similar competitors. You can try to see whether how in terms of their sales, how much of the sales that you can try to use that to see whether you can doing the same thing and maybe the grabs the similar market share, from your competitor as well. So as a businessman, you may really need to understand that where are you competing, because you cannot just go into the market which your product totally cannot survive in that environment. So that is my response to you. So it's not just from the web data, but somehow you should also aware that how much in terms of your competitor can generate and how you actually can grab the market share from them. Okay. Yeah.
All
I
right.
think we have. Go
sorry,
ahead, Ayam.
Yeah.
Sorry. Okay. Again, back to the question one. I mean,
Okay.
when we do forecasting, for example, because if, for example, we receive like when we pitch to investor, if you give us 100K, then this is the number that we can generate. Okay. So that was what we put in pitch deck. However, because that is only on projection. What do I mean by projection? So if, for example, investor agree to pay us, okay, this amount of number, and then suddenly the result is not what the investor want. So
Understand. Okay, so for that part, right, I can say it's more towards the reputations of the entrepreneur. For example, today I go and raise fund. I will tell the investor, say how good I am, how good I am, how good I am. All right. But somehow the result is not good. Am I right? So the investor may fed up, hey, how come, Then you explain the reason. Okay, I feel is because, this and that, this and that, this, that. Okay, so again, you tell them, okay, I know this is where is my value, and I'm going to raise another round of funds, to justify that I'm going to make it in the second round. So again, as I say, if you're able to convince to your investor that whatever the result you not meet, okay, so you're going to change your strategy, you explain the whole scenario, which they also believe you with your new strategy, you can generate even more profitable in future. As long as the investor buying, that is fine. But the problem is, if let's say, for example, you tell the investor, oh, this one cannot deliver because the delay law, then the second round, again, I say delay law. If let's say you show the attitude to the investor that you are actually not really focused into your business and every time is more towards complain others and all this, then the investor may how to say feel disappointed towards you. So again, as I say, fundraising world is actually considered small. So whenever you do the forecast, the people will trust you. I mean, just for example, IPO, why people willing to give the PE 10, PE 12, PE 15 for you to go listing? Because when you go for the IPO, you also need to do the investor roadshow. You will go and show the institutional investor that say, what is actually my next year profit? What is my forecast? So again, all the analysts were actually looking at that. Okay, I believe you. I'm willing to buy your shares, But somehow in the next year, the second year, the third year, you still, generate losses or small profit. Then you will disappoint because something that when you say out something is not really match the outcome, whatever your forecast is not meet with the actual result. Yeah.
All right.
Yeah.
Thank you.
Yeah. No issue. No issue. Yeah.
All right. We have a couple of questions from Hafiz from Breto as well.
Yeah.
Hafiz asked, if we receive a grant, will it give us an upper hand in fundraising?
All right. So if I really have a grant, first of all, I need to know how much in terms of the grant. So again, let's say the grant is already sufficient for me to run my show, to run my business as mentioned. Then my next question is, why should we still go for equity? Because you see, when you go for the equity fundraising, right, you need to give up your equity. So again, as I say, you need to balance it. If the grant is already sufficient for your business expansion, then my question is why you go for it. But of course, if let's say the grant is just a small, in terms of the amount is not sufficient for you to do your business expand, then you can still consider go for the equity crowdfunding. No issue. Yeah.
So in terms of fundraising as well, I mean, receiving a grant doesn't necessarily mean like it makes fundraising more easy, but it gives you additional validation, right? For example, a professional like Ivan may not trust what you have in your details, right? But if he sees that, you've received a grant from Cradle, right? Knowing the entire process they do to validate and their entire due diligence, he's like, okay, someone else has given you some sort of validation. And it kind of adds to your branding as a startup and adds to your legitimacy. So it helps you in that sense. But in terms of the actual fundraising exercise, you still have to go in and at the end of the day, still convince the necessary investors.
Yeah.
The next question that he had is, can I actually offer my early adopters equity? Is it considered equity crowdfunding?
Sorry, can I actually offer my early adopters equity? Is it considered? What do you mean early adopters? I mean,
Of like his early users, early customers.
oh, I think I also did mention yesterday. I mean, it depends on you. As long as it's not conflict, you know, the investor role and also the early adopter roles, right? You can manage it well. So that is not any problem. But again, as I say, sometimes if your customer become your investor, so perhaps the perception might be different, you know, sometimes. So then I mean you as an entrepreneur, you will be feel exhausted because in the same time you need to manage customer and you also need to manage the investor role of the same person. Yeah.
Right. Just to add on there as well, I mean, it's if you can get your early adopters to invest in you, that's a good way, because at least to a certain extent they understand you guys as a business. You don't have to sell them so much because they already buy into your vision. Key thing is when we talk about ECF, right? ECF is something that is moderated by Securities Commission in Malaysia. It's handled by Securities Commission in Malaysia. So you have to get registered as an ECF campaign using one of the providers. I think there's only 6 legal providers in Malaysia who allow you to undergo ECF. And then they can come on board as an ECF investor. Yeah. So it doesn't work the other way around. So you need the ECF campaign to then bring on your early adopters into the ECF campaign, not you get your ECF guys and then you bring them together, and that's immediately considered an ECF process. Hope that makes sense.
Yep.
Yeah.
Okay.
All right. I think we have time for one last question. So any founders have anything they want to clarify or get details on?
Yes.
Go ahead, Hujat.
Yeah, one more question regarding the investment term sheet, right? Let's say, as you mentioned, the startup is successful and they receive the investment term sheet, right, from the investor. From your experience, like, what is orange flags that the founder needs to watch out for the investment term sheet in terms of some hidden traps or things that can basically screw the founder? From your experience, like, are there, certain clauses in the investment term sheet that the founder should watch out for to make sure that they don't get trapped in the legal items or different clauses? Like, what kinds of traps have you seen that are common? Thank you.
Okay, understand. Okay, generally, few things. All right, I think in terms of the investment term, right, what kind of the share that you're willing to give? Because I think some people, they say no issue with the ordinary shares because they also not just investor, is also maybe a strategic investor. So it's good that give the ordinary share, or maybe they want to have in terms of the board of director position. All right. Then some people that prefer, using a preference shares. Preference share, which means that they still enjoy all the dividends, but somehow they do not have a voting rights, during the shareholder meeting. Okay. And then also another part is if you're really confident with your shares and all this kind of thing, right? Some people, they also do offer redeemables and convertible shares. I mean, for example, 3 years or 4 years down the road, you are confident that you want to go for IPO. Basically, you can offer this kind of thing. Yeah. So then also in the same time, do you want to committed to pay the fixed dividend or not? Because normally startup business, they not really put that. But I think some of the startup, I think they also mentioned that, whether you should put the 4%, 3%, fixed dividend policy for that. So maybe perhaps this one you really have to aware on it. Okay, and also another thing that I would like to highlight is because as I mentioned, if you go from the pre-seed round, towards all the IPO round, right? So you will get diluted your equity interest. So you need to make sure that when you're giving up the equity interest, right, you yourself will eventually still hold 51%, before IPO case. Yeah. So then at least you are still will be in control of the companies. Okay, so these are the few things. Yeah.
Thank you. Thank you.
Yeah.
All right. Okay. With that, I think unless any startups have one more question, if we have any more, we have time for maybe one more question. Going once, going twice. And if you would like to have your question answered by Ivan after today's session, you can go on the Academy portal and try and book Ivan's time for an ad hoc mentorship session, right? That based on Ivan's availability, you can sit down with him for an hour and have further discussions with him about how you can help with, he can kind of give you advice on your specific business case one-to-one. With that, guys, I would like to call this session to a close. Thank you so much, everyone, for coming. Thank you so much, Ivan, supporting yesterday.
Thank you very much. And good luck to everyone for your fundraising route.